the new audit manual actually has all this planning documentation available for you. So I think the key point is this. It's free-form notes for this C1 planning memorandum that is in the manual, and you don't really have to complete all the checklists. Okay? So really, it's built up very nicely. I think the key document, I guess most of us here are practitioners. I think one of the key documents that perhaps you as a partner or the SP signing off is that you must look at this at the C1. That is the very minimum that you need to do. The second point is materiality. And again, this is one of ACRA points, and there's what was highlighted in that public report last year was that there are some working papers that do not have materiality. And in fact, in my interactions with some public accountants, their response was that although I did not set the materiality, I actually covered a lot. And in fact, had the PA set the materiality, they would have covered less. But the key point is that in any audit, you need to have a materiality. The argument that I've covered 80%, 90% actually is not quite justifiable not having a materiality. And I guess the other point is that, which I've also heard previously, and in fact even within our firm, I would like to set a materiality for P&L and a materiality for balance sheet. Because in my opinion, maybe perhaps the balance sheet is less risky, the P&L is more risky. So they have this concept of dual materiality. That means, for instance, in P&L, I would set materiality at 100,000, and balance sheet, I'll set it at 200,000. In fact, within our firm, to be very candid, we actually asked our own technical at international level, and they came back to say that it is not quite right. The ISAs do not actually contemplate dual materiality, and therefore, at the financial statements level, you should have just one materiality level. But of course, life is not so easy, right? So as Woon Wai has just mentioned, since you guys keep talking about dual materiality, we give you 2. Okay? But actually the concept is along the lines of this dual materiality. Of course, as Woon Wai has mentioned, the key takeaway for you today, I think, insofar as the clarified standards are concerned, is that we have this concept now of overall materiality, which is, in my own way, I say it's basically the materiality that you set at planning, and which you set to decide which of the balance sheet items are considered material. And you use it again at the end of the audit when you decide which items, when you decide on adjustments, whether to adjust or otherwise. Then performance materiality, the concept is quite simple in my own way, and that is performance materiality is where we use it for execution. Anything to do with sampling and carrying out the audit program, that's performance materiality. So that's how internally we distinguish between the two. This other point, which is functional currency, it's, I would say, a very common point that's picked up in a lot of inspections. And unfortunately in Singapore, we face this issue, I think, in quite a number of audits. My advice is very simple. Without going into the technicalities of the standard itself, which is not easy. Basically, you have a client that's all Singapore dollars, revenue Singapore dollars, expenses majority Singapore dollars, I think you're quite safe. That functional currency is Sing dollars, simplistically. Okay? But you have a client where the sales revenue is largely US dollars or euro, and you have nothing, I guess, documented in the work papers, then I think it's going to be quite challenging to defend your position. I would also like to say that the responsibility for assessing and determining the functional currency, of course, rests